I'm Yule, and in today's episode, we will be talking about the stock market. Where to invest, how to invest, all of that fun stuff. I stream every Monday, Wednesday, and Friday on Twitch. Link in the description below. And I'm not a financial advisor, so invest at your own risk. This is for educational and entertainment purposes only, primarily entertainment. But let's get started. All right. Today, I wanted to give a basic rundown of the stock market. I guess it'd be a good place to start, especially for some people. And then I wanted to get into understanding compound interest and giving you guys a visual on how it's calculated and how that can enhance your ability to make more money over time, or just see the potential for it. So let's get started. So what is the stock market? So the stock market, at least in the US, allows you to buy and sell securities, and a security is essentially a portion of a company. So when you buy one share of, let's say, Dropbox, DBX, right here. I go to stocks, and we bring up Dropbox. Okay, so when I buy 41 shares, so I have 41 shares, you can see that right here. I have technically an ownership of that company. Very small portion, only 41 shares of their very high number. 7 billion in the free float. Right, I gotta move the camera. But when you buy a stock, you actually own a portion of that company. So technically, I own a small portion in Apple, Verizon, Kronos Group, AMD, Tattooed Chef, Nokia, Wynn Resorts, and many more. And what's nice about once you start being a part of these companies is when they grow, you grow. So when their stock price goes up, the value of my shares goes from what I bought them at. So for Dropbox, right here, my cost basis is $19.84. You can see it right here. $19.88, sorry. So I paid $19.88 per share for Dropbox on average. And now each share is worth $23.88 as of this particular moment or screenshot in time. And so the gain there is that $4 per share. So you can see that right here. I've made about 20%, so $161 on those 41 shares right now, just over the course of the past 4 months or so. And what that allows you to do is, once you make more money, that's gains. So if I wanted to sell this stock to realize the gains, which is what it's called when you sell the stock and you actually take the gains, I would get the $161 profit on top of what I initially put in, which would be the $815. So I would come out with $976 right here. Now, this gain here, I have to be taxed on that. So if I sell all 41 of these shares, and with Dropbox, I haven't owned this company for longer than a year, so I'm going to get taxed at a higher rate because it is not counted as long-term capital gains. So anything that's long-term capital gains is taxed at a lower rate, which means you've held the security for longer than a year, at least in the stock market. And if I'm right, I could be wrong, I believe it's 15% for long-term capital gains, but it also depends on your tax bracket, and they will be changing tax codes with the new administration that's in. So keep an eye on that. I'm not a tax accountant or anything like that. I'm just a guy, not a broker, not a financial advisor. So everything here is for entertainment and, educational purposes for you to learn and learn how to learn, which is my goal, is to teach you how to find this information so you can do it yourself. So once I sell those shares, okay, now I have almost $1,000. I have to remember I'm gonna owe money on my taxes for that gain, and over time that gain's gonna get more and more and more. But because I sold this within a year, I will have to pay gains tax on that, which is gonna be around probably 25%. I would pay $40 in gains tax. And long-term capital gains, if you make less than 45%, at least through my research, do your own, is actually zero. So I don't have to pay any long-term capital gains tax as long as my total income is below $45,000. So if I took long-term capital gains for $40,000 and I didn't take any other income in, that's 3 gains right there. In theory, we'll see what actually happens when I do my taxes. So that's kind of the basic rundown of stocks. The next question would be, where can you buy stocks? And the answer to that is through a broker. There are tons of brokers out there right now. There's a lot of startup brokers. Right now, you can see I'm using Webull. This is a very easy, fairly intuitive system. You have your accounts on the left, where you can see all of your trades and deposits down here. At least this is how I set it up. These are all my positions. So you have the ticker symbol. So each stock has its own ticker symbol. So NOK stands for Nokia, TTCF is Tattooed Chef, and so on. And then the quantity is how many shares, the market value, so that's the total amount those shares are worth at the moment, altogether. And then your unrealized gains, profit, loss, P&L, and then in percentage, the current price of the stock, your average price, and then your total cost basis. And then it has my position percentage. So right now, Dropbox is about 48% of my entire portfolio, at least right now. And I'm okay with that because the risk reward for Dropbox is super high, and this account also doesn't have a ton of money, so I can't diversify too much when you don't have when you don't have a lot of capital. At least it's at the start. A great way to diversify if you want to and you don't want to pick individual stocks is there's opportunity to invest in ETFs. Exchange traded fund. But it's all electronic, which is amazing. So there's no brokerage fees generally, or they don't charge you a commission per trade or per share or whatnot. I think it comes out just through the stock price. But those are really good. Ones I like and I've owned in the past are Vanguard ETFs, so VOO and VOOG. The Spider's really good as well, SPY. These track the S&P 500, which is the top 500 US companies on the market in the publicly traded markets. Now, a lot of companies are private as well. And when a company's private, such as Red Bull is a private company. I can't just go out and buy a portion of their company or shares in their company. I would have to have a large amount of capital and go to them and say, hey, I'd like to be an investor. Here's a bag of money. Now, not everyone's got a bag of money or wants to invest in those companies. And sometimes those companies just don't want investors. So they kind of just let it ride. But if you're looking to get into investing and you don't really know a lot, but you want to start, and I think starting is the most important thing you can do is just start. Open an account, put a little money in, whatever you can afford at the time, and start. Because the more time exposure you have to the market, the more likely, or the more time you have for your investments to grow and for you to learn. And learning is one of the most important parts about this, because there's a huge learning curve. And you can also do, and with that learning curve, it takes time and just being there and doing. And focusing on the long term. At least that's how I like to invest. You do you. You know, I can't tell you what to do. But invest for the long term is my recommendation. Some people do really, really well day trading, swing trading, all of that type of stuff. But for me, the easiest thing, mainly because I have time on my hands, I'm young, I'm 26, that when this happens, when this big dip, this was the COVID dip. When that happens, I know I have time, so I know it's gonna go back up, and that's why I bought a lot of stocks down here. And a lot of people got into the market that had been told, hey, when the next dip comes, get in. Because if you got in anywhere, say here at 250, which you're either getting in on the down or getting in on the up, at 250, you're up $100 per share right now. Now, we didn't anticipate this at all. But with technology, and modern science and all that other stuff, you know, things, it goes back up. So don't be afraid of red days if you have capital, and when I say you have capital, you have like money sitting around, free cash. If you believe in these companies long term, buy those dips. Why not? If you're willing to pay for it up here at $300, why wouldn't you pay for it at $250? Unless the fundamentals of the company have changed or the direction has changed in a way that you don't like. But find those companies that you really believe in, and do your research, stick to them, and just monitor. You got to think, all right, I like that stock, but I need more than just 3. Like 3, good amount. But I'm up 51%. Imagine if I bought 100 of them. That's some money. So just keep that in mind. Hey guys, just wanted to fill you in on what happened when the market opened for Wynn Resorts. When we were recording this video, it was about around 108, and then market open, big gap up, and we ended the day at $116.99, so around $117, which is up $8 per share. Thank you guys for listening. If you made it this far, please hit that like button, and don't forget to subscribe. It means a lot to me, and hopefully I can bring you guys a lot of knowledge moving forward. If you want to catch me on Twitch, I stream there. Most of my content here is streamed live. Most mornings pre-market, and then during the market while it's open, as well as in the evenings. I'll stream some games with some friends. So thanks for watching, and I'll see you in the next one. Thank you. Yeah, win. All I do is win no matter what. And your hands go up. Can you say winning?